Hi guys, Will here, and in today's video we're going to explore the concept of risk to reward ratios and not just their importance, but how you can use them to massively improve your level of profitability. So make sure that you stay right through to the end today, because this will be a really important video. It really will. And just very quickly, before we dive in today, if you are struggling with your trading or you'd like to know more about how mechanical edges are traded, I've actually put together a free video course for you that will map out and explain everything in detail, along with walking you through exactly how mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link to that in the description and you can click through and watch that straight away. Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that we share with the trading community here on YouTube. So for any new traders we have tuned in here, let's start by stripping the topic back. Okay, so what is a risk to reward ratio? Now, in its simplest form, it's a calculation of how much a trader is willing to risk within a single trade versus how much they're aiming to make on the trade from a profit perspective. Okay, now as an example, let's say you're about to execute on a trade and you're wanting to set a stop loss of 5 pips and a take profit of 20 pips, right? The risk to reward ratio here would be 1 to 4. So in other words, you're risking 5 pips for the chance to gain 20 pips back, right? But why? Why place a stop loss and manage risk at all, right? Well, the fundamental theory behind this whole concept is to push your account balance ahead in line with your strategy's win rate. Okay, see, most traders out there, and maybe you can relate to this, they snatch at small wins, but they take full-size losses. They take large losses. Okay, actually doing the opposite and constantly drawing their account balance backwards instead of pushing it forwards, right? And this is generally because they're acting on emotion and they typically don't have clear proven rules in place to keep them on track. Like a builder following a blueprint when constructing a building, right? It's critical to have clear rules in place, a proven, repeatable framework to follow, right? One that maximizes the reward side of things and caps the downside, so that you can actually, again, continually push your account balance ahead and grow your equity as a profitable trader, right? Now, if you're going to trade profitably, it's critical that you're able to identify opportunities where the reward far outweighs the risk. And here at WB Trading, all 4 of our strategies are actually built around this fundamental principle, okay? Applying risk to reward ratios correctly and actually capitalizing on large wins with small losses. Okay, it's what makes us and our clients profitable traders in the first place, right? But to really strip this concept back, the idea of using solid risk to reward ratios is to make absolutely sure that the odds fall in our favor, or in other words, that we have what we call an edge, right? We are the casino, so to speak. It's pretty much that simple. And the thing many traders don't understand is that there are only 2 types of strategy out there. One comes with a low win rate but large wins, or 2 typically comes with a higher win rate but smaller wins. Okay, and you never get both sides of the coin. You never get a high win rate and huge wins. And by huge wins, I mean, well, one of our strategies actually brought in a 14R win just last week, or in other words, we risked 1 to make 14 back. We risked, let's say, $100 to make $1,400 back. That is profitable trading in a nutshell. And all we did to bank that was sit down at the screen at the exact time that we were told to, follow our rules, walk away. It's that simple when you have rules in place to actually follow. But coming back to the 2 types of strategy out there, if you have a strategy like we do, where you're able to bank wins of that size, win rate really is more of an afterthought in many cases, because you could take 5, 10, even 15 losses, bank 1 trade of that size and still be profitable. That's the point I'm trying to make here. you'll still be pushing your account balance ahead in that scenario. Again, that is what you call an edge over the market. Now, on the other hand, selecting a viable risk to reward ratio is vital, absolutely vital, because if you bat for too large a win and you don't have the statistics to actually prove that that's viable, what you're actually doing is setting yourself up to lose money, inadvertently, of course. For example, you can't just think, well, Will said in his video that my risk to reward ratio should be large, so let me just set a 10-to-1 risk to reward on every trade that I take. Right? What it comes down to is the strategy you're using and its win rate in many cases. Okay, so for example, within the program that we offer, we share 2 of each of those types of strategies. So 2 lower win rates but higher win size strategies, and 2 higher win rates but smaller win size strategies. And they're built around entirely different concepts, providing entirely different sources of edge. Now, this is why it's so important to have proper education so that you understand this stuff. You have the data in hand that explains why a certain strategy's win rate is what it is. And this is what most traders lack: true, concrete proof behind what they're actually doing, true, concrete, proven rules to follow to actually make sure that they're taking the correct trades in the correct markets with the correct risk to reward ratios in the first place, and so on. And if you don't have that stuff, that is a problem. That is a big problem. Now, I will say one thing. The type of risk to reward ratio that's going to be right for you will depend on the type of trader that you are. Okay, we're all different, right? Maybe you're like me and you prefer a lower win rate but larger wins. Maybe you're the opposite and you prefer a higher win rate and smaller yet more frequent wins, right? Again, we're all different. It'd be ideal if there was such a thing as a strategy that won every single trade and resulted in massive wins alongside this, but that's just not the reality. Unfortunately, I wish it was, but it's not. And what I've found over the years, and I still regularly speak to traders making this mistake, but they're actually trading in a completely backwards, non-profitable manner. They're taking massive risk, sometimes not even using a stop loss, which is insane in itself, in order to bank pretty tiny winning trades. Or in other words, like we said earlier, they take frequent but small wins, and then when a loss comes around, it's monumental, and the damage that does is just massive. Actually drawing an account balance right backwards instead of pushing it forwards, which is of course what we want to do here. That's our job as traders. Anyway, so when it comes down to it, it's really up to you as a trader to figure out and find what works best for you in that respect. So whether that's choosing to trade using concrete, proven strategy with clear rules to follow that result in high risk to reward trades that allow you to push your account balance ahead, or whether you trade using massive stop losses, snatch at small wins and draw your account backwards and end up losing money, right? The choice really is yours to make. But as a takeaway tip for you today, always avoid having your risk outside your reward. That much is critical. And all in all, it's really important to maintain discipline on this one. I know it can be scary when you're new and you're risking, let's say, 1 to make 4 or 5 or more, but wow, when you bank a double-digit risk to reward win, it will quickly change your perspective. That's for damn sure. Not to mention pushing your account balance ahead. That's for sure. Anyway, I hope that helps, and I'll see you in the next video soon.